you have a bunch of countries that used to be adversaries that are coming together to push back against the Western hegemony and the sanctions and the tariffs and all this stuff. And it's China, it's South Korea and Japan and a bunch of these Asian nations in Southeast Asia, and they are uniting together. But here's where it gets really, really, really interesting. And let me pull up, see if I can find it. I don't know if I can or not. Well, I guess it doesn't matter. I'll just explain it anyway. So what happens is about 2 weeks ago, they came out with the renminbi cross-border payment system. And the renminbi cross-border payment system is Project mBridge. They took it over. China did. And they announced that they had integrated 10 Asian nations and 5 Middle Eastern nations into the renminbi system, cross-border payment system. Again, the countries in Southeast Asia and Middle East. So they've integrated them. And this payment system settles not in the 3 to 5 days that SWIFT does, but in 7 seconds. And the SWIFT system and the dollar is not compatible with this bridge network. And you remember Saudi Arabia was a full participant in Project mBridge before the rug got pulled by the BIS. But anyways, so you have this system that is free from SWIFT interference that settles in 7 seconds. And you have all of these countries that represent 38% of global GDP. Well, why did I mention that other stuff? Get to it in a moment about the other countries, then the other groups. So you have a growing BRICS community where the 44th country to apply it is Vietnam. And so you have 44 countries that have applied, Vietnam being the last. Indonesia has already been accepted as a full member of BRICS. They have the largest nickel deposit in the world. So all of these things are relevant and big, but let's go back to the payment system. So you have just connected China with all of these nations. And then you get what's happening in July, the BRICS meeting, and the finance minister of Russia comes out and says something massive. And this is what isn't being talked about, because a lot of people will poo-poo the BRICS and say they're not big enough and they don't have enough pricing power and the dollar and the bond market are the biggest in the world and blah, blah, blah. Russian finance minister Lavrov just came out and said that this technology is priority number 1 for the BRICS meeting in July, that the integration of a new settlement system for BRICS nations. And he said, and I quote, that this new payment system will be open to non-BRICS nations as well. Now, let's put it in context to the Belt Road and the Shanghai Cooperation Organization and the Eurasian Economic Unit and the 38% of the Asian nations and the Middle Eastern nations that make up 38% of global GDP as it is. You put all of these countries together, which would then be 3 of the 4 largest nuclear arsenals on the planet, the majority of all of the commodity production from soft to hard to precious, the majority of all the refining of rare earths, the majority of all of the manufacturing capability on the planet. You put it all together and all of these nations will have access to this new cross-border payment system, which is operational and will be extended to those countries which are all united and closely aligned with the Chinese market. You now have the ability to flip the switch very quickly. And every one of these countries will have the ability to trade in local central bank digital currencies and settle in gold. And the last piece of the puzzle is the Shanghai Metals Exchange saying we're going to internationalize our endeavor and start building exchanges in other countries, starting in Hong Kong and Saudi Arabia. So you settle imbalances in gold. Well, the vaults will be all around the network and they can settle directly in the Shanghai gold market with bars right then and there. So what I'm saying is that all of this placating of tariffs and meeting with President Trump and saying, yes, sir, that's great, you're the king. And then that's great, but behind the scenes, they're preparing for plan B. They are preparing for a world where the dollar and the treasury are not the preeminent and dominant settlement and reserve system. And you can see it if you look closely enough. But there's so many naysayers that the inability to see that the infrastructure is expanding. The very fact that they're allowing non-BRICS members to do this might be the biggest news that we've ever seen regarding the BRICS. No one's talking about it. We'll see if I'm right. I feel that I am. For Lavrov to say we're opening it to non-BRICS members, that doesn't mean the United States. That means, I think, all of these countries that are closely aligned with the BRICS in terms of what they're doing and trading permits within the BRICS zone, I think is something that could expand massively de-dollarization as the months continue.
You know, I've said for years that the real shifts happen quietly, under the radar, ignored by the mainstream, and missed by 99% of the financial press. Well, this one might be the biggest yet. We are watching right now a global movement unfold, a coordinated pushback against the Western-dominated financial system. And it's not just China or Russia anymore. It's dozens of countries, many of them former geopolitical adversaries, finding common ground not just in economics, but in survival. Because survival in this new era means breaking away from the weaponized dollar system. I want you to think about what we're seeing in the broader context. You've got China, South Korea, Japan, Indonesia, Vietnam, Saudi Arabia, the UAE, whole blocks of Asian and Middle Eastern countries who have historically aligned with the West, now quietly shifting their allegiance. Why? Because they're sick of the weaponization of the SWIFT network, of the endless tariffs, of the sanctions, of the threats, of the dollar being used not as a tool of commerce, but as a geopolitical club. And they've had enough. And then, bam, comes this massive development that no one's talking about. The new renminbi cross-border payment system, known as Project mBridge. Just 2 weeks ago, China announced the integration of this system with 10 Southeast Asian nations and 5 Middle Eastern nations now on board. You know what that means? A massive chunk of the planet, representing 38% of global GDP, is now connected to a settlement infrastructure that doesn't use SWIFT, doesn't rely on dollars, and doesn't take 3 to 5 days to clear. It settles transactions in 7 seconds. Think about that. 7 seconds. Meanwhile, our banks still act like it's 1998, pushing paper and charging fees to move money that takes days. Project mBridge is already operational. This isn't theory. This isn't an announcement. This is live, and it doesn't talk to the SWIFT system or the US dollar at all. It's built on distributed ledger tech, central bank digital currency rails, and it's ready to scale globally. And here's what's critical. Saudi Arabia, yes, the same Saudi Arabia that was the cornerstone of the petrodollar deal, is a full participant. That is a generational shift. That is the linchpin. The entire post-Bretton Woods financial order was held together by oil being priced in dollars. If the Saudis are actively transacting outside of SWIFT and the dollar, the foundation of dollar dominance has cracked. Now let's talk about the BRICS. Everyone loves to dismiss the BRICS. They're not unified. They're too diverse. They can't compete with the US financial markets nonsense. Right now, the 44th country to apply for BRICS membership is Vietnam. Indonesia, home to the largest nickel reserves on Earth, has already been accepted. And now we've got something even more important. A formal declaration from Russian Finance Minister Anton Siluanov. What did he say? That the creation of a new BRICS settlement system is priority number 1 at the upcoming summit. And here's the kicker. This system is going to be open to non-BRICS nations. Let that sink in. That's the big one. That's the iceberg everyone's ignoring. We've crossed the Rubicon. This is no longer just a BRICS internal settlement project. This is now an open architecture, permission payment network, interoperable with other CBDCs and gold settlement platforms. This is a system built for expansion, built for onboarding, built to replace the dollar. Now here's where it gets even more interesting. The Shanghai Gold Exchange just announced plans to internationalize, starting with new physical gold settlement platforms in Hong Kong and Saudi Arabia. That means when imbalances arise in trade between these BRICS plus nations, they will be settled in gold, not dollars, not digital tokens, gold. And how do you settle in gold in real time? With vaults already integrated into the network. This isn't some high-level idea. This is live infrastructure. Saudi Arabia and Hong Kong will hold physical bars, and nations trading within the network will be able to clear balances directly using metal. They won't need to buy treasuries. They won't need to touch US banks. We're seeing the quiet rollout of Plan B. And the naysayers, the mainstream media, the economists who couldn't predict the rain in a thunderstorm, they're all laughing. But that's fine. They laughed at Bitcoin. They laughed at gold. They laughed at the idea of de-dollarization. Now they're watching U.S. treasuries become untradeable and central banks gobbling up gold at the fastest rate in half a century. You want to know what the world thinks of U.S. debt? Look at the yield curve. Look at the failed auctions. Look at the rising interest expense that will consume 30% of tax revenue by 2035. Look at the fact that the U.S. now spends more on interest than on defense. And here's the uncomfortable truth. Even if we ignore the unfunded liabilities, even if we take the government's numbers at face value, even then, we are on track to default through inflation. And everyone knows it. The bond vigilantes know it. The central banks know it. And the BRICS, they're just building the exits.
People might not feel that way, but the majority of the public will, because there's very little, pretty much the only thing that the media does is foment divisiveness and not talk about any of this stuff. And but when you see month over month of massive imports in the U.S. becoming a net importer of gold, maybe that is what we're seeing. When you see the world, central banks across the globe repatriate their gold from the Bank of England and the New York Fed, which were typically the places that they kept it for access to the COMEX and the LBMA. When you see the LBMA go from T+1 to T+8 weeks, because evidently the Bank of England has a shortage of trucks and manpower to move metal around. When you see all of these things happening, the Japanese bond market blowing up, there are so many points that are pointing towards things coming to an end, that maybe this is the slow integration or the slow remonetization of gold into the system, or the slow reset happening right in front of us. So you look at the actions, everything is upside down. When you look at the actions of what the Trump administration is doing, and you could make the argument that this is happening right now. If I were looking at it, I would say it was to be expected, and we watched it happen in real time. Most people will be completely caught off guard by it, 100%.
Right. Okay. Let me ask you a couple of sort of conspiracy-esque questions. Maybe not fully conspiracy-esque, but one, how worried do we need to be about the LBMA running dry if there's so much demand to pull physical out of it?
Yeah, that really, I guess you could say, is the issue. They're being bled dry. You look at it in terms of silver as an example. They have a float of 300 million ounces. That's in silver. That's the amount of silver that isn't encumbered. It's even a little bit less than that. Of the 800 million they hold, 500 supposedly belongs to SLV and other ETFs. But the 300 million float, they claim to trade 290 million a day in terms of paper. But they have said that those numbers are 10 times understated, as they only post the final settlement numbers. So if that is the case, you're talking trading 2.9 billion ounces of silver per day, unallocated, rehypothecated, 10 times the float, 3.5 times annual global mine supply. And in gold, it's about 2.5 times annual global mine supply, the amount of metal they have versus the paper, these unallocated, pooled, if you will, contracts. And what differentiates, look, there was just the LBMA, or the central bank of Europe, just came out. Where did I put that? I just read it. Here, listen to this. The EU warns gold can undermine the region's financial system. The gold market may pose a threat to the financial stability of the Eurozone, especially in the context of geopolitical tensions. ECB experts identified risk factors, and here's what they're getting at, including high demand for physical gold, so give me the gold, I want it, the dominance of large traders, i.e. commercial banks, and insufficient transparency of transactions. So what you have are these banks that are trading massive amounts of non-transparent, naked short positions. And what's different is, I want the gold. No more, I trust the paper. Give it to me. That's what is very different.
So let's go ahead and connect the dots, because what I laid out in part one, this sweeping transition to a new cross-border settlement system away from SWIFT and the US dollar, isn't just some geopolitical story happening in boardrooms and think tanks. This is monetary reality, and it is already rewriting the rules of the global economy. The question now is, what does it mean for you? For gold and silver? For investors who still think the dollar is immortal? Let's start with gold. When the Shanghai Cooperation Organization, the Belt and Road Initiative, BRICS and now Project mBridge all converge into a unified settlement ecosystem with gold as the backstop. Then guess what? The paper games being played in New York and London are no longer the price discovery mechanism. That's the shift. That's the real story. Because when countries like Saudi Arabia and the UAE can settle oil trade with China directly in renminbi and then use gold to rebalance trade, that completely changes the role of treasuries. The petrodollar is now a relic. The petro-gold trade is emerging. That may sound radical, but it's already happening in pieces. Quiet pieces, but they're adding up. The Shanghai Gold Exchange is already one of the largest venues for physical gold trade in the world. And unlike COMEX or LBMA, they don't deal in paper claims. They deal in bars, kilos, actual weight. Now that they're expanding internationally into Hong Kong, into Saudi Arabia, you now have a globally distributed physical settlement network. That's the architecture of an alternative monetary system, one that doesn't care about Jerome Powell or Janet Yellen. You want a real-world example? Look at the flows. Central banks bought over 1,100 tons of gold in 2022, the most since 1950. That wasn't retail panic buying. That was deliberate monetary repositioning. And the biggest buyers? China, Turkey, India, Russia, Uzbekistan. Not exactly NATO members. These countries aren't hoarding gold for diversification. They're preparing for the next chapter of global trade, one where the dollar is no longer the final arbiter of value. Let's talk silver. If gold is your store of value, silver is your accelerant. It's more volatile, more emotional, and much more explosive. And here's the thing. If gold is going to play a central role in settlement for trade among BRICS nations and their partners, silver becomes the overlooked asset that catches a bid when the narrative spreads to the public. Every major gold bull market I've lived through has had a point where silver outpaced gold on a percentage basis. The gold to silver ratio collapses, the public pours in, and silver launches. The fundamentals are already in place. Global demand has exceeded supply for multiple years. Inventories are falling. Industrial demand is soaring thanks to solar panels, electric vehicles, and green tech. But none of that matters until the psychological switch flips. And that's where we are. Close, very close. Because this time, the monetary backdrop is even more bullish than the 1970s. Back then, we had stagflation, but we still had functioning debt markets. Today, we have inflation, a broken bond market, negative real rates, and central banks monetizing their own debt while pretending not to. What's different this time is how gold and silver are behaving. I said it earlier, and I'll say it again. This market is different. You knock gold down $100 or $200, and it comes roaring right back. In 2013, gold fell and stayed down for almost 8 years. This time, every pullback is shallow and short-lived. Why? Because the buyers aren't hedge funds trading leverage. They're sovereign entities settling trade. They're not selling at $2,000 an ounce. They're stacking. And silver? Same story. The paper price is still suppressed, traded on COMEX like it's 2010, but try buying size in physical silver right now. You'll pay hefty premiums. That disconnect is growing. It tells you the paper market is losing credibility. And when that rubber band snaps, it won't gently realign. It'll break. I've seen what happens when silver rips. I remember the early 2000s, the 2008 to 2011 run. These markets move not in months, but in days. It's the most emotional metal there is. And this time, it won't just be American retail driving the move. It'll be BRICS members settling gold and stockpiling silver for industrial and monetary purposes alike. That's where it gets really exciting. Because while gold is being bought by central banks, silver is being largely ignored, by officialdom anyway, which means it's still dirt cheap relative to everything else. But it won't stay that way. So what should you do? First and foremost, understand that this is not a moment for complacency. If you are sitting in dollars and thinking, I'll wait to see what happens, you're already behind. The transformation is not coming. It's already underway. The dollar isn't going to collapse tomorrow morning, but it's being sidelined trade by trade, nation by nation, year by year. This is how empires end, not in a Hollywood explosion, but in a slow, steady loss of influence. And when confidence finally breaks, and it will, the repricing won't wait for your advisor to give you the green light. You don't wait to buy fire insurance when the house is already on fire. You don't wait to buy physical metals when COMEX declares force majeure. You don't wait for CNN to tell you there's a new global monetary order, because by then, the trade will be gone. This is about positioning. Quiet, steady, conviction-driven positioning. Own gold, own silver, hold them outside the banking system. If it's not in your possession or in a segregated, allocated vault, you don't own it. You have a claim. And in a crisis, claims are just pieces of paper. And don't think this stops at metals. Real assets, land, agriculture, water rights, energy, these are the lifeboats in a world of floating IOUs. The paper financial system is saturated with leverage. What isn't leveraged is ownership. What isn't leveraged is a silver eagle in your hand. I say this not because I want to scare you, but because I believe time is short. Not hours or days, but quarters, years. This is a process, but you need to be ahead of it, not watching it, because the next decade isn't going to be like the last four. We had the greatest 40-year bond bull market in history. We had deflationary tailwinds, cheap energy, demographic booms, and globalization. All gone. Replaced with fiscal addiction, energy instability, demographic decline, and weaponized finance. We are moving into a harder world, and in a hard world, hard assets rule. This is not a gloom and doom forecast. This is a reset of expectations. And in that reset, those who are prepared won't just survive, they'll thrive. You want to be on the right side of this? It's simple. Exit the system, re-enter reality, own what's real. And remember, this time, Plan B is already built. It's just not built for you unless you make it your own.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.